So if you're in your 50s like me or your 60s and you're thinking, I just don't know if my retirement savings are enough, then a small allocation to an asset that does 150% a year will compound massively and will help you in having purchasing power in your retirement, because nobody wants to be broke when they're 85 years old.
According to Raoul Pal, founder and CEO of Wealthion, the prices of Bitcoin, Ethereum, Solana, and all cryptocurrencies will go up the most during the bull market in 2024 and 2025. There is a strong link between crypto tech and macro, as many people have said this could be the biggest crypto bull market ever. A former Goldman Sachs executive shared an interesting look at this link. A friend says that the bull market in 2024 and 2025 will be very unique because it will be a summer for both crypto and macro. The CEO of Wealthion believes that the prices of crypto assets will rise significantly because of a number of positive things happening at the same time. It's possible that Bitcoin will be worth more than $200,000 in May and up to $1 million before the bull market ends. Pal is even more positive about Ethereum, Solana, and other Layer 1 tokens that look good. Pal said in July that Solana could rise as much as 47 times from its lowest point in the previous cycle if everything went as planned. One of my friends thinks that the fifth largest cryptocurrency by market value will hit $1,000 before the cycle finishes. That's a $45.50 in price from where Solana is now $180, which is a 70.85% rise from a year ago. Pal recently did an interview with Wealthion. Anthony Scaramucci, the head of Skybridge Capital, was the host. The well-known macroeconomist talks in the interview about the coming crypto bull market and some great Layer 1 tokens, such as Ethereum and Solana, that can make buyers a lot of money before the cycle ends. Here are some clips from the very thought-provoking talk. Please like this movie and subscribe to.
I have no idea why. It's just the English accent. That's all it is.
It's the looks. I actually think it's the looks. I think it's the looks and the smile.
So listen, what's going on is the same story that's been on for a while. We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time.
Yes, of course.
It's also the Bitcoin halving time. So Bitcoin halving reduces the supply. And then there was the ETF. So basically, we've got a perfect setup of liquidity plus new demand plus reduced supply. And so the rest of the year should play out the same way. I mean, I continue to be very bullish this year and very bullish for most of next year. Because Bitcoin is basically a share of a network, the more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's that the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on. So let's assume that this is the largest ETF launch in history, and a lot of newbies have come in. Well, it's happening at a magic time. The magic time is what's known as the Bitcoin halving. So new Bitcoin comes onto the market via miners, Bitcoin miners, who undergo huge kind of mathematical calculations to produce a Bitcoin. There is a fixed number of Bitcoins that can be produced each year. So it's a competition to produce them. So you need a lot of computing power. And then every 4 years, the algorithm of Bitcoin itself halves the number. So if there were 100 Bitcoin being produced by miners every day, whatever the number is, right now, after April 20th, it goes to 50. So there's more people coming into the market, which is new demand, and new supply is shrinking. So all the time, the only supply is really sellers of Bitcoin who hold Bitcoin right now. But Bitcoin's one of these weird assets where 80% of all holders just hoard it, like you and I. We just don't do anything with it. We just hold it. And so there's really only 20% that's available for trading.
One important thing that Pal thinks will keep driving up the prices of Bitcoin and other cryptocurrencies is the permanent debasement of fiat currencies by central banks. According to Pal, the U.S. Federal Reserve and other central banks killed all fiat currencies when they started printing them carelessly in 2008 to save the banking and real estate industries. However, they were only able to delay the inevitable, and Pal thinks the final crisis is still coming. During the meeting, the ex-Goldman Sachs executive also talks about some good Layer 1 tokens he's investing in and how you should divide your capital between your main crypto assets and your degen bags. Here are some more interview clips.
Think of why most people have bought gold. It's to protect themselves from the action of central banks. It has proven itself over several thousand years to be a way of having a store of value. Bitcoin is that for a digital age. Okay, most people know that story. They don't understand the other side of the story. Is why does nobody feel as wealthy as they thought they should be? You know, particularly if you're a bit older, you're like, why are my savings not as much as I thought they would be, or I can't afford as much? Right, that's the big conundrum. And the fact is that particularly since 2008, when we broke the world because of debt, we have been using the printing of money to try to paper over the cracks, because economic growth from an aging population is slower. We don't have much productivity because people are retiring, and we've got too much debt, so people have to service the debt. So the central banks have been doing a bit of magic, which is printing of money. At one point it was called quantitative easing. Now they don't do that as much anymore because everyone knows that game, because that's the money printer go burr. So what they do is they inject liquidity into the system, whether through all these weird things you hear about, like reverse repo market, stuff like that. Basically, it's to hide the printing of money, put it into the system. When you look at that on a globalized level, because everybody's doing it, you're debasing the level of fiat currency. And what that means is your dollar today buys you less assets tomorrow. Now, why do we buy assets? We buy assets to save money for future consumption. So if I were to buy gold today, it's because I want to release it in future and I want its purchasing power protector for it to go up. Now, when you look at what's happening with the debasement of currency, they're debasing currency by about 8% on year on average amongst all the global central banks. Add in about 3 to 4% global inflation, you have 12% hurdle rate on your assets before you actually make any money. So your savings, you need to be making 12%. Now, since 2012, the S&P 500 has made 12% annualized. The NASDAQ has made about 24% annualized. So tech stocks have helped. But crypto is the one that really offsets this and allows you to generate a lot of wealth. So if you're in your 50s like me, or your 60s, and you're thinking, I just don't know if my retirement savings are enough, then a small allocation to an asset that does 150% a year will compound massively and will help you in having purchasing power in your retirement, because nobody wants to be broke when they're 85 years old. That's everybody's biggest fear since 2012. The
Since
NASDAQ,
Bitcoin started.
99 point, yeah, since 2012, not even since Bitcoin started.
Right. So since
Every single asset on Earth versus Bitcoin since 2012 is down 99.9%.
In other news, JP Morgan thinks the U.S. Securities and Exchange Commission will finally allow spot Ethereum ETFs. However, the banking giant says it will take legal action to get the regulator to change its mind without that happening. Nicholas Pugu, managing director and global market analyst at JP Morgan, says that the agency should only approve the ETFs 50% of the time by May 23rd. If spot Ethereum ETF approval doesn't happen in May, we think there will be a court case after May. Nicholas said in an interview with The Block this week that the SEC would eventually lose the case, just like it did with the Grayscale and Ripple cases in 2023, and would have to accept spot Ethereum ETFs. Nicholas' 50% chance of approval in May is twice as high as the 25% chance of approval given by Bloomberg ETF analysts. This is true even though the SEC is asking for feedback. on suggested rule changes for 3 spot Ethereum ETF applications from Fidelity and Bitwise Grayscale. There is still a very small chance that the applications will be approved next month, according to Eric Balchunas and James Surt. In a post on the social media site X, a senior Bloomberg ETF analyst said that the SEC is not interacting with the spot Ethereum ETF applications like it did with the Bitcoin ETF applications last year. The post reads, "The lack of engagement seems to be purposeful versus procrastination. No positive signs. It's only a few weeks until the SEC's deadline, and experts are becoming less and less optimistic that the applications will be approved in May." However, cryptocurrency investors are still very hopeful that the approvals will be announced in May. What are your thoughts on the differing opinions? Do you think the SEC will have to approve spot Ethereum ETFs later this year? Please drop your thoughts below.